Good. Okay, good stuff, guys. So look, quite a few pounds, quite a few yens. I mean, yens have been absolutely blinding this week. Don't tell me I didn't give you the heads up last week. There was a lot happening, and there's definitely been some money to be made this week. A couple of percent for the week is great. Well done, Gurpreet. 70% win success rate is where we want to be, mate. 78 is about right, to be honest. And then stage 2, once you're consistent at 70 or 80% win to loss ratio, is about reducing your losing trades and increasing your risk. But at least you've now got a base to work with. Good. Okay, so look, first chart we're going to highlight is pound. We've seen, and for some of you new guys, I won't go into too much detail because I don't want to overcomplicate things with the fundamental side of the market. But we was expecting a rate hike from the Fed. They did, but it was a lot more than what we expected, hence the volatility that we've seen. On the back of that, you've seen the S&B, the Swiss, increase rates slightly higher, and pound today have only increased by 0.25, which was expected. But as we can see, we're now starting to see the pound drop off. So there's a bank, we need to now look at the votes and the percentage change and so on to understand why the pound's dropping off, considering how low and how weak the market has actually been. So this is why the back end of this week, it's been choppy, difficult, and in fact, coming into these high impact news announcements, the market's been quite range based. So what tends to happen is the institutions, hedge funds, they wait for these key announcements and decisions to be made and then react on the back of it. Now, sometimes these big institutions are not taking trades directly after these sort of high impact news announcements. They could also be managing positions. They could be running in a huge negative, and the news, the initial burst of excitement, other hedge funds making moves, they could clear up some of their positions. On the flip side of that, they could also be taking positions that are going to weigh up scenarios in terms of other desks. So in a bank, you've got the FX guys, you've got the bonds guys, the treasuries guys, you've got the fixed income guys, and they'll all be working with each other to balance the books even or in profit at the end of each rolling month. So that's why we get a bit of a jump around, a bit of indecision, market volatility. And sometimes for us as intraday day traders, it's best to just sit out, wait for the confirmed direction, and then move on. I personally believe pound will bounce back from this. I mean, you're looking at only a 100-point move. We've seen, especially pound, move a lot more than that in a day. So don't be phased by this. And as a new trader, if you was just to dive in and sell now, that's a very 50-50 trade. So you could dive in now, make 20 pips and walk away and think you're the world's greatest trader. But the next time you do that, you're going to get burned. So the purpose of learning how to do this properly is trading strategies and making informed decisions that you're going to win 70 or 80% of the time. Therefore, you're going to be a trader for the next 10, 20, 30, 40 years. You're not just going to make a few quid, then blow yourself up in a couple of weeks being a gambler. And I think as a new trader, it's very, very easy to dive in on moves like this. So again, be careful, stay away. If you've missed it, you missed it. Who cares? So what? There'll be more trades falling into place tomorrow. But that's the pound. So look, let's just talk about the dollar for the minute. Has anybody got an opinion on the dollar and where the price is positioned? We are in an uptrend. We are very high, yes. We had an interesting move a couple of weeks ago, in fact. All of this in here because typically this is a strong amount of selling to be seen in an uptrend. And we did actually break cyclicity and start to cycle again in here. So even if we're taking this part, you've still got an uptrend formed. I personally don't really want to be a buyer this high, and I don't trade the weekly time frame much, but you can see we broke straight past February's highs, and there's another key level a while ago, as you can see. I think it's 2014 actually, 2016. You can see that we've taken out the high, so we're incredibly high compared to what we're used to. And I do think in the future the dollar will continue to get higher, but as we know, the market never moves in a vertical line. It breathes, it cycles, and so on. So we need to start looking for some sort of deeper retracement. And again, if it's going to be a deeper retracement, I think it will start to be more of a weekly phase too. And you've definitely got a few hundred points to gain should you be entering and looking at the turn of that market. So just taking the last couple of days, Thursday today, Wednesday, Tuesday, we're not seeing too much at all. This typical bar here, we can see sellers interacting at all-time highs. So that's telling me that sellers are in and around fighting away. Yesterday was a bit of an indecision candle, equal number of buyers and sellers. And today, the day's only just started. We're at lunchtime. So these are all signs that the buyers are running out of steam. We're lacking control from the buyers, which is not a problem. That you don't want to be entering a market when it's looking as awful as that. And from a shorter time frame, you'll definitely start to pick out a range. What I like to do is I like to understand where my recent support level could be. And I always work to round numbers. So the easiest one that I can find at the moment is 104.50. So for me to be an intraday trader of the dollar, I'm going to be looking for a move below 104.50. This gives me a bit of an insight as to actually I'm below where price has been struggling. So all the time price may bobble around like this. Doesn't matter. Move on to another currency. You've got far too many currency pairs to worry about, to trade, to analyze, to be trying to force a trade, should we say. So those of you that like trading, perhaps OB style, break and retest, you just look for a little bounce below, dip below, come back, test 104.50 for big sellers, buy, and off we go. Or we could look for strong confirmation straight into the 200, which will be more of a momentum-based trade, right? And that's definitely something to keep an eye on. So that's what we're kind of seeing at the minute. We are starting to see lower highs and lower lows as well, as you can see in here. So this is the formation of your downtrend starting. I would personally like to also see a 20 and a 50 cross, just to give me a bit of a heads up that we are confirming we are coming this way. And as always, as a reversal, the 200 moving average lies as your support, your target, you take profit, right? So that's something to keep an eye on. And until then, you've got to remember the dollar's the king, right? Dollar's our number one currency. If we're getting not much back from analyzing and trading the dollar, then what do? We rely on the dollar to give us direction. If it's not giving us direction, then we have to be patient. And sometimes our cross currencies are more enjoyable to trade. On the flip side of dollar index, obviously over 50% is weighted towards euro dollar. And this is pretty much a mirror image. As you can see that you've got big move up, dip, bounce. The opposite to that would be big move down, dip, bounce. So it's exactly the same technically. Now, what we're seeing in here is a downtrend formation. So we are trending lower, but we're failing. And I like the fact that just not quite yet have we broken this level. The low of this area, you guys might just want to take note, is 1.0349. So I'm just going to stick a little level in at 1.0350. And this will be my area where we may need to adapt if sellers take over and break this area. And that, of course, shows dollar buying as well. But I don't think that will be the case. And just like we saw here, price can range for, I mean, you're talking 10 days. So the fact we're entering low support, so on, you could see 10 days worth of ranging, which doesn't matter. We don't need to trade every day. We don't need to force trades out. We just need to make money. And sometimes it does mean sitting on our hands to make money. As I always say, sometimes the best trade is in fact not to trade. So if we're talking about this into consideration, that's going to be your double bottom, price to potentially move higher. It might not happen today, it might not happen next week, might happen the week after, but who cares? It happens when it happens, and we'll take advantage because we're now planning what we want to wait for. So just to show you the hourly time frame, we haven't quite bounced up, but you can see all of this morning, we're seeing buyers stepping at similar levels, right? So something's going on in here. We may get a dip back down to that level and a bounce higher. We may not, but cyclicity is going to lead the way for us. So what I would suggest, guys, is just using this area here, which is marking out the last high. Excuse my dodgy drawing. And anything above that will start to give you the heads up, Euro's moving in our favored direction. So we're looking for a minimum of 2 cycles to tell us, right, we are in a trend. And in this case, it's going to be an uptrend. So what you'd essentially want to see is that being the low, the high, your low, and then start to cycle onwards and upwards. And that's exactly what I'll be looking at. So if we break the high, we're now going to make a new higher high, and that confirms our trend, doesn't it? That tells us where we're going, shows and leads us the way. Any questions so far, guys? We did just have a look at pound, but I'll come on to that in a minute. So again, we're not going to dive in today or tomorrow. We're just planning and we're marking out areas that once we get above, we become a safe buyer. Once we get below, we become a safe seller. All good, guys? Good stuff, good stuff. Well, look, let's just move on to pound as it is next in line. This is obviously based on the recent decision. So yeah, we've moved what, maybe 200 points or something, but yeah, 120 points. But what we can't do again is dive in. Now, this is something that, in fact, I want you guys to look at. Okay, so daily downtrends, we're due a daily phase 2, right? We know the market never moves in a vertical line. It breathes, it cycles. We're due this pullback phase in here, right? So we're due this little move. Now, the daily time frame is telling me that. What we may want to do is drop down to the smaller time frames where there's more bars, more cycles, more opportunities. So just to look at a 1 hour time frame, we are here in a 1 hour uptrend, and I'll just talk you through that. There's the low, that's where we're going to start. There's your high, low, that's one cycle, right? Your next cycle is again in here. In fact, it's that one there, sorry. 1, 2, 3, 4, 5. So there's our uptrend formation. Since then, we haven't really done much, but what we can confirm is the 20 and the 50 are crossing over, indicating the bias to crack on. So I want you guys, whether you use a horizontal level or just a trend line or anything like that, to mark out the last low. Because if we're in an uptrend right now, price has to break that low to confirm we're no longer in a trend. So we're not going to dive in on this bar, but I would say as soon as price breaks that, we've completely broken structure, which means we cannot trade a 1 hour time frame. It means we're going to have to revert back to the higher time frames and then start to analyze our next move. If we fail to break this low, it's going to show us that all of the institutions, hedge funds, banks have tons of buying orders at this price, and that's what we expect to see. So again, I wouldn't be phased by the fact that we're seeing quite a deep retracement in here, because I believe the pound's incredibly undervalued at the minute. We've got a lot of pace to kick on and move into if we do start to move onwards and upwards. But this is the area that I'm just watching. If we start to piss around like this, good. It will tell me that soon we're going to have some buyers coming in. The fact that we haven't broken that 120.50 area. To show you a 4 hour time frame, it's obviously slightly cleaner. And what we may get is an inverse head and shoulders pattern in here. And we'd be looking for price to break this high to start cycling onwards and upwards in an uptrend. So I wouldn't dive in, to be honest. I don't really care when a bit of news comes out. And although we could say, oh shit, it's 120 pips, 150 pips, who cares? We get that every single day anyway. It's just about cherry picking good trades and making money. And trading in and around high impact news announcements is in fact tricky to make money because it is so volatile. But if you was to ask me pick a direction, I'd say I think pound's going long. Obviously not right now, but in the near future, I think we'll start to pick up. And again, this could be an opportunity for next week. Just like Euro, there's tons and tons and tons of reward ahead. And I think we just got to be patient, and we've just got to mark out our safe buy areas and safe sell areas. So again, our safe buy area is up here. Once we've confirmed we're in a 4 hour uptrend. If you are looking for aggressive moves, there you go. Look, we've bounced off that level quite nicely already, right? So let's see what it does for the rest of today. And we just want to be cycling onwards and upwards. So that's your pound and your euro. The message there is if it looks crap, sit out. Plan where you need price to get above to be a buyer or below to be a seller, and crack on there. In terms of EOD, potentially, potentially I'd like to see another buyer's candle. Probably won't take it on a Friday, but maybe Sunday, Monday, we might get a nice little move. Okay, so Aussie. Anyone want to break this down for me? Anyone want to talk me through it, what they see? I think the clear thing that stands out is the fact that we failed to break the low, right? So you've now got your first higher low in a downtrend. And I think we kind of spotted that coming, because there's your downtrend. And look at the amount of buying that took place after bouncing from these lows. There's a level at 0.68, 68 in here, which is where price bounced off it quite aggressively, should we say. So there's your double bottom. The buyers come in. We knew we was going to get a higher low. Probably didn't expect this much selling coming in. So we're now looking for a push higher. And obviously this depends on dollar getting weaker, right? So if dollar gets weaker, it's going to help euro go up, pound go up, Aussie go up, and so on. So it all ties in and correlates quite nicely. You just perhaps as a new trader may need to improve your market awareness to know what market's doing what at each time. Just to show you the 4 hour, there's your downtrend, lower low, lower high, lower low. Price failed to continue in this downtrend when we broke past this level here. So again, this is going to be your new higher high. So your go back to yellow. So this will be your high points. And eventually when price comes down, makes a low, will go up. So this will be 2 highs, 2 lows, and will confirm a 4 hour uptrend. Just keep note of this 0.70 mark. I mean, you guys know that I love a round number to keep me in check as to when we take profit and when we enter. So if we start to get 1, 2, bounce back above 0.70, that will open the doors to 1 hour trading opportunities. So we'll get 1 hour trades, and that's of course where we open the doors to multiple time frame opportunities, and we can drop down to the 1 hour. Just like we did in the downtrend here, we've got lots of trades, but expect to see the same once we're above. So again, for Aussie dollar, wait for the 4 hour to create a higher low, confirm we're going to move up back above 0.70 and then continue upwards. Once we continue upwards, then we'll be looking at 1 hour and smaller perhaps time frame opportunities to get in, to get out, to crack on and make some money, because that's the plan, right? We're not here for any other reason. We're not here on a warm day at 12 o'clock to be bored, although you may be. We're here to try and make some money in the near future. So Kiwi. Kiwi's obviously going to be in a not too far of a different position, should we say, in terms of where we're positioned on Aussie. Although what we did get in here, which is actually quite interesting, is the higher low, the lower low. So in fact, it's bear with me one moment, guys. I'm just trying to pull it up on my other chart where I've got my drawings. Yes, as you can see here, we have got a lower low, so we are still in a downtrend. So if we're looking to perhaps take Aussie and Kiwi because they're in a similar position, my preference would definitely be Aussie over Kiwi because of the simple matter that we are still in a downtrend. And on Aussie, we're in fact in a bit of a daily uptrend, although it's quite extreme. So looking at that there's your lower low. So at the minute, we have to treat this as a phase 2 of a downtrend, because that's what it is. So if we now move to the smaller time frames, we'll take a look at the 4 hour chart. The 4 hour, again, we're in that similar position where we could start to see a bit of a higher low formation in here. And that would show as an inverse head and shoulders pattern, which is a reversal pattern that we enjoy trading. So once price breaks the high, again, you can mark out that high. And if you come back from work one day or walking the dog and price is suddenly up here, then you know I've broken that high. We're now in a 4 hour uptrend, and that's when our 1 hour time frame moves onwards and upwards. So that's definitely what to look out for. I think it probably looks a little bit better on your 1 hour than Aussie does, because you can start to see the pattern form, and we are getting bounces, bullish movements. So again, I would personally wait for 4 hour to break above, and then there's all your 1 hour trades up here. But again, it really relies on dollar weakness. So it's good because we can just plan multiple scenarios. And if none of them happen, who cares? But if a few of them happen, then you'll be sport for choice as to which one you take, right? And that's the plan. That is the plan. Gurpreet, yes, we will go to DAX, mate. But as you can see, we're working from top to bottom, and your DAX is right down the bottom there. In fact, because you asked, mate, I'm going to put it even further, so you have to wait. All right? I'm only joking, mate. We'll go through it. We'll get through it in a minute. Okay, dollar CAD. Anyone in dollar CAD? I know a few of the boys had a look at it this morning, to be honest. There was a little reversal teeing up. Isn't quite there yet, but I think we're definitely looking for that. I mean, the amount of buying that we've seen in here is incredible. The CAD's been incredibly weak, hence why we've really favoured CAD yen. For those of you that have been trading the yen pairs with us, CAD yen's been fantastic. There's been a fortune to be made on CAD yen, to be honest. So the fact that we've seen CAD weakness it's come from dollar CAD pushing on so high, and that 125 mark was vital to understand that we're getting that push. And I think you're looking at almost a 500-point move here. If we look at 125 to 130, there's a 500 pip range that price has been playing in for quite some time. So again, look, this is fantastic, guys, because if we do see dollar weakness against perhaps a stronger CAD like we saw back in May, then look, you've got a 500-point reward. So being observant of what's around you is so key. And it's not unlikely it can do it, because it done it in May and it took 18 days to reach just under 500 pips. So again, this could indicate another move lower, just like we've been bouncing for quite some time. So it's all good. I mean, and then leaving that 130 level in will be your perhaps adaptation area. If we should steam above 130 and dollar pick up some strength, then we might have to chop and change what we're thinking. But at the minute, this is a scenario we're looking at, and this is a plan. So, oh, well done, Adam. Good shout, mate. 100 pips up on CAD Yen. Love it. Question, just to answer your question, Adrian, quick question in relation to brokers. Generally speaking, is it better to have live money on MT4 or a trading view broker when trading FX or stocks? That really depends on personal preference. Personally, I just use, I mean, I would say 95, in fact, probably 98% of my trades are FX based. So I just stick to MT4. I mean, I've been using MT4 for over 10 years. So I know that trading view is popular for some guys, but I'm just I like to keep things easy and not overcomplicate things. In regards to stocks, you can find brokers that have stocks. Vantage have stocks, Axie have stocks. There's quite a few others out there that are good. Trading view for me personally is great for looking at correlated markets, bonds, treasuries, certain gold stocks that can influence the move of gold before gold moves against the dollar, that type of stuff. So I have lots of watch lists and filters on trading view, but execution wise, it's on MT4. Cool, good stuff, guys. So that's our dollar CAD. So we're just looking for a bit of a move, aren't we? We need price to start breaking down. So again, oh, there's your low. Breaking past that low would be ideal. The fact that we're just all choppy up here and the dollar hasn't turned yet means we don't need to dive in. Dollar yen. Okay, right, now down to the yen. Just send me a little message, guys. Say yes if you've made money on trading some of the yen crosses this week. Good. Love it. And had you planned this? Had you planned this previously? Or was it a bit of a spare of the moment thing that you've dived in and got in? And okay, good. Fantastic. And that's the importance of it. That really is the importance of it. And I think for some of you guys that are starting to get gain some experience. Hi, can you hear me, guys? Hello? Brilliant, fantastic. So, sorry, guys, I'm not too sure what actually happened there. Let me just share my screen again. I do apologize for it cutting out, but look, we're all back on, so fantastic. Just obviously going back towards the yen. I mean, this was a very interesting move in here because this from this moment here, where we started to get all of these sellers step in, we started to see lower highs form, and that's exactly a lower high in here. So in fact, we haven't actually got a trend, although market has been pushing onwards and upwards. Just to show you a weekly market, you can start to see the weekly market showing some exhaustion. And after, I mean, look, let's call it 14 weeks worth of buying, we're now in a position where we could start seeing a change in the market. And I think that's been very, very important and vital for us, in fact, to start looking for these breaks. And in regards to what we was discussing about the market being messy and the 4-hour breaking the low, that's this in here. So although, yes, you may move out on some of the move, at least now we're below and we've got lower lows on a 4-hour time frame, we can start to see that we're starting to see this pattern really break out. And I now would personally wait for a move back into this area here, back into the low, look for a lower high, and actually take a 4-hour trade. 4-hour trade in here may be the best scenario, and that will actually be completing a 4-hour head and shoulders pattern. Do we see that, guys? So you've got a shoulder, head, pull back in here, lower high will be the right shoulder, and a move into the 200 moving average. So personally for me, I think dollar yen 4 hours is going to be the next and the best setup. So look, keep that in mind. And that might mean next week it pisses about, but then the following week, last weekend of the month, bang, we get some nice moves lower. So plan ahead, just like you plan with these yen pairs, plan ahead. So I think 4 hours going to work best on there. And I think we skipped dollar Swiss, didn't we? But obviously Swiss bank rate increase, which again was a bit of a shock in terms of how much they increased, and they increased the rates, which was always expected anyway. But that's why we've seen quite a dramatic. But look, you've got a nice lower high formation just off that 10500, pretty much one level, and a strong and solid move lower. I mean, we've moved over 200 points, needs 300 points. So there's your double top on a daily time frame. Here comes the reversal. So again, 4-hour time frame, we've seen a nice solid weighted move lower. In fact, again, the best trade might actually be a 4-hour lower high back off this 98.80 level and a move back down. So similar to the dollar yen move. So look, just plan that scenario out, a 4-hour lower high back off of 98.80, and we'll start to see that move really, really crack on. Alternatively, the only other option that we have is a move slightly higher. So I'd be looking at sort of 98.50-ish as your 1-hour reversal position. So slight pullback in here and then breakouts lower. But just like our other majors, make sure you're really looking at your dollar to see what the dollar's up to. And I don't think we'll see much today, but maybe tomorrow and back next week. If we break that 104.50 level, then down we go, and that will open up the doors. So once we get that, and that will really be your confirmation, but once you get that, you then make your decision as to which one of the 6 or 7 major currencies that we're going to actually take advantage on. We don't need to trade all of them, but maybe 2 or 3 good ones, and that's perfect. That's exactly what we're looking for. Cool. Any questions regarding the majors, guys?